Salute, folks. It's your boy, the insurance junkie, your fiduciary fella, the all-star advisor Alonzo Hall, and I've returned today to whap and tap on your head with another ADH wealth solution. Before I go in, ladies and gentlemen, make sure you hit that like, drop a comment, subscribe, and hit that notification bell so you're made aware every time I release new content. And as always, share. Lastly, to contribute to channel growth or to schedule a one-on-one appointment with a licensed financial professional, the links are in the description. Salute, folks. It's your boy, the insurance junkie, your fiduciary fella, the all-star advisor Alonzo Hall, and I've returned today with another ADH wealth solution. Today I'm going to touch on investment vehicles and some of their basic ingredients. But before I go in, ladies and gentlemen, make sure you hit that like, drop a comment, subscribe, and hit that notification bell so you're made aware every time I release new content. And as always, share. Lastly, to contribute to channel growth or to schedule a one-on-one appointment with a licensed financial professional, the links are in the description. So, there's a lot of different investment vehicles in each asset class, and this is also why it's important to work with a licensed financial professional. So as opposed to investing with the same Vanguard fund that your neighbor is in because he got a good return. So we know the asset classes are equity, debt, and cash. So let's start with the vehicles in the equity class. First is a common stock, or a share of common stock represents ownership in a company. Now, stockholders hope for gains in the form of dividends or cash payouts, or capital gains, aka buy low, sell high. Now, IBM is an example of a company that has issued common stock. So next is preferred stock, which is similar to common stock, but has two major differences. First, preferred stock is slightly safer than common stock, and preferred stockholders must be paid their dividends before common stockholders. And secondly, preferred stock dividends are fixed and do not change, while common stock dividends can vary from quarter to quarter. MetLife is a company that has issued preferred stock. So the next asset class is debt, which has a larger offering of vehicles to select from. First is government bonds. In order to raise cash to run the country, the Treasury Department issues securities called government bonds, which offer a fixed rate of income or yield. Now, by buying bonds, investors become lenders to the federal government. These bonds are backed by the full faith and credit of the U.S. government and are viewed as very safe. They're also exempt from state income tax and have long maturity dates ranging from a few years to 30 years. A Treasury note, or T-bond, is an example of government debt. Just a bit less safe is something called a government agency bond. However, unlike government bonds, government agency bonds are not backed by the full faith and credit of the U.S. government. Instead of the Treasury, government agencies issue agency bonds. And this, I want you to think Ginnie Mae or Sally Mae. Now, companies in need of funds issue corporate bonds, which are only backed by the ability of the company to operate and generate a profit. So investors look at these as the most risky of all bonds and generally expect higher rates of return. Typical maturities range from a couple of years all the way up to 40-year commitments. Banks, mortgage companies, and insurance companies typically issue these bonds. So state and local governments issue municipal bonds to operate a variety of state departments and systems like police and fire departments and public schools and courts. Municipal bonds are usually free from federal income tax and thusly pay a lower interest rate. The bonds themselves are backed by the taxing authority of the issuer, so investors view these as riskier than government bonds. So states, counties, and cities will issue municipal bonds. So cash and cash equivalents has the most options for investment vehicles. let's start with money market mutual funds, which is a pool of investors' dollars used to purchase short-term interest-bearing securities. Now, a professional money manager runs the market fund, and these funds tend to yield some of the highest rates among cash investments. Now, yields tend to vary over time, but they tend to follow short-term interest rates in the overall economy. Many of these funds offer check writing and other bank features like a checking account does. Now, most banks and financial institutions offer savings accounts for the convenience of their depositors and have a little or zero minimum requirement to open. Now, yields on savings accounts are also often the lowest in the cash category. Now, they also do offer checking accounts for customer transactions. Minimums on those can vary depending on the features offered. Now, some checking accounts even pay interest, often requiring a higher minimum account balance, although most checking accounts don't pay interest at all. Now, those that do pay interest, however, yield lower interest than even the savings accounts. Now, savings bonds are sold by the Department of Treasury, but through banks and financial institutions. The rates on these bonds will vary and tend to follow the immediate term of the economy. These short-term investments, with the longest maturity being around 5 years, the department also issues T-bills or Treasury bills, which are considered to be the safest of the safe among cash investments, exempt from state and local income tax, with very short-term maturity dates ranging from 3 months to 1 year. Banks and other financial institutions offer CDs or certificates of deposit that earn a fixed rate of interest but must be held until maturity. Otherwise, an interest penalty applies. Maturity dates range from 1 week, 7 days, to several years. Shorter term CDs in the 3 to 6 month range offer a lower yield than comparable money market funds. Now, as a bonus, we have mutual funds, which pool investor money together to achieve a stated goal. For example, the growth of principal or to generate an income stream. Now, mutual fund companies offer mutual funds that correspond to all 3 asset categories. Thus, there are stock funds, bond funds, and money market funds, as well as funds with combinations of stocks, bonds, and cash for investors to take advantage of. Now, the advantages are professional money management and diversification, which happens by investing in tens or even hundreds of securities. These investments are also very prevalent in people's retirement accounts. Now, some securities derive their value from underlying investments, such as stocks and options. An option is an example of a derivative. And now an option gives you the right to buy or sell another security at a set price over a certain length of time. A futures contract works in the similar fashion, except that the underlying investment can be a financial security or some type of a commodity like coffee or pork belly. Now, because these investment vehicles are very high-risk things like employee-sponsored retirement plans that allow their participants to participate, they're gonna, rarely offer these. But for the purpose of this video, there are 2 main types of property. You have real estate and tangibles. Now, no employment sponsored plan offers a direct investment in real estate, land, condos, or hotels, but many mutual fund companies do offer real estate. Mutual funds. Now, tangibles such as art, antiques, and gems aren't permitted as investment options when it comes to retirement plans. However, there are mutual funds that do focus on precious metals such as gold. Anyway, that's going to be it for today, folks. Make sure you hit that like, drop a comment, subscribe, and hit that notification bell so you're made aware every time I release new content. And as always, share, share, share. Lastly, to contribute to channel growth or to schedule a one-on-one appointment with a licensed financial professional, the links are in the description. With that being said, wipe ass, work in progress every day, and see success. Salute, salute, salute. Hey folks, this last video was sponsored by my company, where we help people like you to reach their financial goals. We do this through a simple conversation where we help to identify and then protect your lifestyle, and then we implement a plan. The process starts at about an hour. So, if you want more information or you want to schedule a consult, contact me via the information in the description box, and let's talk and see if we're actually a great fit for each other. And remember, ladies and gentlemen, when people challenge you, they don't challenge you to challenge you, but they challenge you to challenge you. Accept the challenge. Thank you, and enjoy life.